Some very interesting news came out of China just a couple of weeks ago. They're looking to really boost their Q3 GDP by accelerating construction projects and making sure that there's no supply chain delays. And that's what we're going to cover in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. All right, so this article did come out a couple of weeks ago, but I found it very interesting because I do believe that it could potentially signal a strong Q3. So you can see here on July 22nd, Bloomberg reported that China's cabinet called for speeding up construction of infrastructure projects this quarter. And it sees this sector as a critical factor for an economic rebound. So once again, they're looking for a rebound in Q3. And you guys already know that they just reduced interest rates for an additional juicing of the economy in Q3. And so a state council meeting chaired by Premier Li Qiang, I apologize because I can't pronounce that properly, called on local governments to ensure construction and supply chains won't be interrupted and that more job opportunities be provided to migrant workers. So they're looking to tackle domestic unemployment as well. But here's the problem. How can local governments ensure that supply chains aren't disrupted if the country still maintains its zero COVID policy? They will lock down different areas at zero notice. So it's very challenging. And I think what this really is saying is that maintain the testing, make sure that people know what the protocols are, make sure that people are safely distancing themselves when they need to make sure that nothing gets locked down. I think that's the idea here. But just a reminder, guys, that doesn't mean that China is going to be going after their 5.5% GDP growth this year, which is a target that they gave us earlier in the year. They have largely backed off of it. So you can see here in the article that China has backed off its yearly economic growth target as it doubles down on an ultra strict zero COVID policy that has, of course, destroyed the economy by crushing consumer spending, manufacturing, trade, and just reducing the amount of jobs that are needed to be worked. And so my question is, how can you stabilize supply chains and ensure work for migrant workers if the city can be shut down due to zero COVID measures? And so this is a challenge that they haven't proved to do well with. And I don't know if in Q3 this doesn't pop up once again like it did in Q1 and in Q2. And here's the read through of their walking back of their 5.5% GDP growth target. And I believe that the read through is that the Chinese government is not expecting to spend on infrastructure projects to reach that 5.5% target, which is what the investment community was expecting for China to do to achieve that target in 2022. And guys, don't forget that in Q2 of 2022, the Chinese economy only grew by 0.4%, which was primarily attributed to lockdowns across the country, which stifled industrial production and consumer spending. So effectively, what that Q2 growth number did show us is the huge economic toll that the country is paying by sticking with their zero COVID policies. But you guys know that I'm always very pessimistic on China, despite being a huge bull on Alibaba. So I'm kind of like back and forth, hot and cold, but there is some good news here. The PMI in July came above 50, which is great. I didn't expect that was going to happen. But once again, guys, remember that a PMI coming in over 50 signals that the economy is in a period of expansion. And so buying levels rose for the second month in a row, which led to a further rise in stocks of purchased items. And on a price front, there seems to be input cost inflation easing as commodity costs have come down. So ultimately, that's really good for the Chinese economy, and let's hope that this continues into Q3. The other thing that I do want to point out is that China's central bank just unexpectedly cut a key interest rate for the second time this year and withdrew some cash from the banking system to revive credit demand to support the COVID hit economy. So not only are they looking to push the construction of home projects quicker, but they're also looking to revive credit demand by easing the level of interest rates, which of course you guys know is the opposite direction of the direction that the West is going as they're looking to combat high levels of inflation. And as you guys are well aware, a growing Chinese economy is of course potentially great news for Alibaba as they are so levered on domestic Chinese consumption. Virtually all of their free cash flow is generated in that China commerce segment. So this, of course, is good news for them going forward. And because this news is so good, I personally do expect that this could be a catalyst to bring that price back above that $100 per share mark, but we'll see how this plays out. Now, before I go into my valuation for Alibaba, the one thing that I did want to mention to you guys is that approximately 80% of the watch time on this channel is coming from people who are not subscribed. So guys, if you have a chance, please consider subscribing to the channel. Now let's go into the valuation. And from the valuation, you can see that I'm valuing the company at approximately $300 per share, which is a free cash flow per share valuation that's net of their forecasted stock-based compensation. And so that reflects a value of approximately 30% of its intrinsic value. And if the share price does continue to decline and it goes into that $80, $70 per share area, I probably will triple down on this security. Now, how do you get access to that brand new Alibaba model that I just created for the Patreons? Well, you can get access to all of the models and the tracker at the lower tier of the Patreon. And one thing that I do want you guys to be aware of is Ray Dalio's Bridgewater recently exited their investment of Alibaba. And I actually give my thoughts as to why I believe that they did exit that position. And you can actually get access to that video right here.